The recent ASX re-weighting has meant some old school companies like Main Pharma have dropped out of the ASX 200, but some newer names like Mesoblast and Zipco have worked their way into the index. But what does this say about valuations, and what does it mean for wealth managers? To discuss how he's positioning himself in these markets, Will Hamilton joins us now from Hamilton Wealth Partners, live via Skype in Sydney. Thanks for coming back. Great to have you here today. So yeah, talk to us. How's your thinking about valuations, especially when it comes to some of these, companies that are being valued on forward revenue? Has it changed at all? Does the ASX 200 inclusion for Zip bring it cred?
What we do to try and compare apples with apples, we ask our asset allocation consultant, which is Heuristic Investment Services, to re-weight the Australian index on MSCI World Index levels. So you've got something like the tech sector, which is 4.5% in the MSCI Australian index, gets reweighted up to 15%. Now, what the norm is about for the Australian market is about 10 to 12% premium. And just before the correction, it got to a 25% premium, and that was an all-time high. We've only just recalculated this because I was quite intrigued as to, you've got sectors like technology at 2.4 times, trading at 2.4 times for international peers. You've got things like healthcare at 2.2 times for industrial 2 times. You've got infrastructure at 1.6 times. So we recut those numbers just recently, and I was actually quite shocked. It's come out at a 55% premium. So the previous high was 25%. It actually got to about 60, and we've just suddenly seen this retracement, but it's trading at a 55% premium. So that, look, it's showing you what you're doing is you're increasing the weightings of the sectors that are small and that have run, and you're decreasing the cheaper sectors that have got a larger weighting. So it is quite a disparity, but a trend is a trend. And, I've been concerned about the domestic market, but I must admit that shocked me.
Well, of course, it has been underperforming when compared with global markets. But are you seeing any further changes, particularly as we've been talking about those risks and also opportunities in the next couple of months, heading beyond the US election, how that's likely to affect global stocks? What are you looking at locally that's likely to influence your stock picks?
Actually, I agree with some of what your previous speaker had to say. The thing I'm concerned about is the influence something like the banks have on our domestic index. It's 22% of the index, and they're a dividend play purely now on decreased dividends. They're a yield play. They're ex-growth, and that does concern me. Something that has such a large influence. So, what am I looking for post the US election and looking long term? My sort of thesis that I'm looking at is that one area I'd probably disagree with your previous speaker. I do think there will be the influence that there's so many of these vaccines are getting trialled out there. They are going to come to the world. That is going to, and markets look ahead. And I think that you're going to see therefore something which was what I'd call more a broader. I'm not looking at a broader recovery and looking at stocks and areas that are affected positively by more a broader the economic pickup. But I think I'm not a pro of or for a shift from growth to value. I'm not advocating going towards value at all.
Okay, so if you're sticking in the growth end of the market locally, Will, where do you look? I mean, keeping your previous point about valuations and portfolio weightings in mind.
Yeah, look, you'd have to look at areas like consumer discretionary. I think that's an area that comes into mind. But again, there are clear winners and losers, and traditional retail, I think that's shot. And I think that that there has been such a big pickup with respect to online shopping and the fact of e-commerce, etc. So I think that's a positive. And some areas like if you were to get a broad economic recovery, and that was coming across globally, then something like the energy sector has to, even from these levels, start to pick up. And the energy sector is right at the bottom of its range, and even our Australian stocks are trading below that of its global peers. Looking internationally at a broader recovery, I'll be looking at stocks like Estee Lauder and Disney. I think they're the type of things which I think you will see a pickup in. Yeah.
Okay, good. Good to get those names from you, Will. Thank you so much for joining us again today. Really appreciate it.
Okay, you're welcome.